are you doing today? My name is Anade, and I am your financial data scientist. Now, first and foremost, that doesn't mean I know everything about finance. I've been studying finance for the past 4, 5, 6 years, on and off. Now I've decided to make it a full-time gig. So, yeah, I am trading full-time now, and not only am I trading full-time now, I actually built an app that actually helps other people trade full time. All right. So everybody has the stocks that they choose. So the stock that I am choosing today is, well, it's a few. Let's start with, we got eBay, we got Amazon. I like eBay just because it costs less, right? Because that's what it comes down to, right? If you got a smaller account like mine, and when I say smaller account, I mean baby account, right? Even though you can still make a lot of money, you can scale up. But once you get over 1,000, 5,000, really 5,000. Once you get over 5,000, and I'm talking about money that you have freely to invest. However you got to get it, if you got to max out a credit card, whatever it is, but do not do that until you have real strategies, right? Because this is the thing about options, what people need to understand. It's about probability, right? So this is what I mean. Probability, risk, and return. So that means, let me show you exactly what I mean, right? All right, let's look at eBay, right? So you got different types of strategies, right? You got the vertical call, vertical put, diagonal call, diagonal put. My favorite strategy is a vertical put, especially for smaller accounts. Now, as I started growing my account a little bit more, I'm more so using diagonal puts and iron condors. But let's just stick to the simple stuff, where you can kind of see the risk and reward like ratio, right? So we're gonna stick to, let's see, if we're doing risk and reward ratio, we're gonna do a diagonal call, right? And the reason I like a diagonal call is because you're already seeing it in the beginning of basically the amount of money it takes, $10, right? So basically for 100 and basically my entry is $10, right? But matter of fact, first let me switch this trade up a little bit to get it exactly how I like it, right? So this is a diagonal call, which means diagonal expiration dates. So today is December the 18th, so I'm going to actually change this to January the 2nd, right? So why am I changing this to January the 2nd? Remember, I'm buying a call for January the 2nd, and all of this is going to change. Let's just focus on one line at a time. This is how you understand options. You got to do it one line at a time, because if you try to look at everything, it's going to confuse you and you're going to quit, right? So now let's just start with the symbol. We got the symbol. This is Charles Schwab, by the way. Charles Schwab. I highly recommend a professional brokerage like IBKR. If it's still around, Fidelity, which I'm actually going to start using Fidelity after today, to be honest with you. I do have a Fidelity account, but I never use it. I think I'm going to start trading in Fidelity just to kind of see the difference in brokerage accounts. I do not recommend, even though there's people making a ton of money off Webull, trading options, and all these, I always recommend a professional brokerage, because trying to trade on your phone, unless you're highly skilled or you got a lot of money to lose. See, a lot of these gurus that be talking to y'all, they already got money and they're getting money off of teaching you, right? And so they can lose a lot of money, right? But for somebody that got a smaller account, I'm talking about a baby account, and I'm talking about $500 or less, right? If you got a $500 or less account, you want to get in trades as low as possible, right? So let me kind of show you how that works. So now, a strategy that I use if I want to get into a trade as low as possible is called a vertical put, vertical call, a diagonal call, or diagonal put, right? So in this particular one, I'm going to do a diagonal call, right? Don't worry about what it means yet. Just know what the strategy. Just recognize the strategy, so when you see it again, it'll make sense to you. So at a diagonal call, you are buying a call at a later date. So right now, this is not correct. So let me change it to a later date, which is going to be January the 9th. And let me change this to an earlier date. Now, the money's in my favor, right? So that means for a $105 investment, as you see here, maximum loss, snap out of it. Because I be trying to teach people I know, and it's like they don't want to think when I start talking options. Snap out of it. You know what this means. This is maximum loss. Like they start looking at everything else. No. Focus on stuff you understand. We know what maximum means. That's how you learn options for real. Focus on what you know. Then start piecing everything together. Okay. Because if you start, well, what's a limit price? What's an order type? What's a leg? What's a net quote? You get lost. Start on what you know. I know I'm spending $105 and my maximum profit is unlimited. That's how you trade options. That's it. But you gotta have $105 to lose. But if you lose $105, you will know exactly why. Do not trade options unless you have $105 to lose. Even though you can get into trades, and I have gotten into trades way cheaper than this. I'm talking about I've gotten into $9 trades and made $20-something. You know what I'm saying? You can literally see, people think you need a lot of money to get into options trading. No, not when you know what you're doing.